absolutely. Let's have some fun. So, hi everyone. I'm Yuval. I'm the co-founder and CEO at Digital Asset, the creators of Canton Network. I think we're gonna talk about tokenization. I still don't know what tokenization means, but everybody's talking about it. So we're gonna try to unpack the topic, hopefully understand what it actually means, or probably not, but we'll try. So what we're going to do is we're going to ask every one of the panelists, what is tokenization and where do you see the opportunity, the low-hanging fruit in tokenization? So Rick?
Yeah, so hello, it's a pleasure to meet everyone. Rick Gullabove from Franklin Templeton Digital Assets. Look, I think when you think of tokenization, you have to think of a world that is emerging right before our eyes in terms of access, right? Different access points are evolving and changing. You know, Franklin Templeton was the first asset manager to tokenize, digitize a public security and put it on public blockchains. So what we've done, we've enabled, let's say, mutual fund, a US government money market fund, and enhanced it to a totally different concept of where it's evolved to. So tokenization, what we think is the next revolution of everything's going to change the landscape of public markets, private markets. Everything as we know will make it more efficient, and that's through the rise of using, public blockchains, private blockchains, et cetera, of just enhancing existing models of products. I think what we're really seeing is unique parallels between the rise of the internet in late 90s, 2000s, to even thinking about how the ETF really revolutionized financial products as well. I think you can think of the same thing when you think about tokenization as well. So I don't know if I answered what is tokenization, but I think tokenization is access and changing the access to not just the US, but the whole landscape of this galaxy, this universe that we all live in.
Yeah. Michael, I keep on saying that when it comes to tokenization, to me, it's all about the utility that you drive from it. You guys had a small IPO that is completely driven by utility of tokenization. Maybe you can share your thoughts.
Yeah, sure. And thanks for having me. Yeah, I think tokenization, for at least in the context of Figure, has really meant liquidity. We are the leader in RWA for mortgage and broadly private credit. And what we've done is we've created a marketplace that's much more liquid, much more tradable for private credit. You hear about that as an asset class that's really grown. And we've added the ability to kind of trade it, standardize it. And I think from a tokenization perspective, that unlocks ultimately lower costs, right? So what we've done is we've been able to do, for example, in mortgage, take a 45-day process and turn it into a 5, and a $12,000 process and turn it into 1,000. And I think that is an example of tokenization that drives liquidity that then ultimately drives down costs, which is really at the promise of blockchain, and kind of going back to the beginning when people were excited about all these real world implications. A lot of that went away and there was a lot of crypto for crypto's sake. But I think one of the reasons why you see enthusiasm around our IPO, to your point, is because this is an example of blockchain actually adding value in the marketplace.
Right. Alan, you've been working on tokenizing markets, generally speaking. So what is tokenization for you?
Yeah, absolutely. Thank you. And good to see everyone. I'm Alan Konevsky. I'm the CEO of T0. I'm a lawyer by training, so every answer turns into a list. So what or why tokenization? One is, and Rick and Michael touched on that, why do people want to go to a single database with digitally native representations of value that are self-regulating and automated? That obviously the efficiencies that come from that, from taking highly fragmented ecosystems like the securities industry in the United States, and it's pretty similar in other markets as well, that has multiple layers of market participants, multiple layers of intermediation, multiple databases, a plethora of manual processes, and collapsing it again into a single transparent database using a public blockchain, for example, that is immutable, that again is transparent, that is auditable, and where value is represented in digitally native form through self-regulating code that again can perform functions that traditionally are played by market participants. The industry is always going to be regulated. That's just how human beings work. But the question is, who is going to be enforcing the rules? Is it going to be human beings and organizations? Is it going to be technology? And the efficiency promised with single database and smart contract automation, and that doesn't get talked enough about, is absolutely critical. That's point number one. Point number two is around geographic convergence. I think digital assets are about 24/7 global access to items of value. Again, if you go kind of a continuation of single database idea, what internet did for data and voice, this technology is doing for financial assets and other items of value as well, and other data points. So countries are still going to be fragmented. You're still going to have laws. You still have to cross borders. Policymakers and regulators talk about regulatory convergence, but rules are going to be different from country to country forever, so long as people are people. And what this technology does, particularly if you put together best-of-breed infrastructure operators in each region, is to allow you to smooth out cross-border frictions, to permit global capital formation, to permit global liquidity for regulated asset classes, particularly tokenized securities. The third piece of it is different kind of convergence across asset types. So again, pretty fragmented, siloed world. There's securities, there's derivatives, there's cash, there's cat pictures and whatever else. The idea, again, as most asset classes are going to converge onto common rails for the reason we talked about before, interoperability across them, across these assets, is really a key feature of this technology. And until we reach that full interoperability, we have to strive for user experience interoperability. And I think the last point is just customization and utility, and people will talk about it. Michael talked about what Figure is doing in the HELOC space, for example, but customization and utility of this technology to specific use cases, to specific efficiency objectives, is unparalleled. And again, the power of smart contract automation has a lot to do with it, where a share is no longer something that's sitting in the desk drawer. It's an interactive experience and an interactive relationship between the capital provider and the company or the project that is consuming that capital.
Awesome, thank you. Matt, NASDAQ was created, so I used to trade on NASDAQ, and it was created by making markets electronic, remove the pit. Why do we need to add another layer of digitization? Like, what does tokenization, from your perspective, bring to the table?
Yeah, thanks for having me. So the way we think about tokenization more broadly is it is a little bit of a next evolution of the way the asset is actually managed and utilized. So you brought up, I think everyone brought up some sense of utility. We look at it as mobility and then programmability. So when you start to think about assets that sit out there in different portfolios, sometimes a lot of the mobility is fairly static. And this technology allows to remove the static nature of some of those assets and put them into utility. And you see that generally in crypto markets, but now you're starting to see that with tokenization more taking fold. So now how do we apply that from a NASDAQ perspective? When we think about the technology that we provide and the market infrastructure that we're providing, we look at how folks are using collateral, how collateral is now moving across the ecosystem, the ability to make it more seamlessly flow and allow for reuse of that collateral for additional trading opportunities. So that we look at as a core functionality in enhancing the mobility of the asset more broadly. The second piece around really programmability is making that asset now composable with other applications. So whether that is taking an equity and allowing it to better be used in a lending application, or when you have stock loan, stock borrow, making it more efficient and allowing those assets to not only just move more freely, but be programmable. So if you're doing a repo transaction, those transactions can seamlessly move. You can get financing and then replace that and replace that financing fairly quickly, and it opens up a lot of trading opportunities. So we look at it as a way to enhance the market more broadly by really creating the asset to be more useful.
Awesome. Rick, money market funds have been probably one of the sleepiest asset classes in the world, pretty much held by insurance companies and those type of, and in the last few years have become like the next hottest product. Clearly also as a result of stable coins becoming very popular. You know, what do you see as the future, and are there any lessons learned? I mean, do you see it starting to be used as collateral, as a means of payment? Like, what are, like, are you guys still excited about money market funds?
Yeah, we're super excited. I mean, all the above you just mentioned, right? Look, when we really first started our journey in this kind of vision quest that we had of thinking about tokenization and all this, the reason why we chose a US government money market fund, and keep in mind, this was 2017, 2018, so at the time rates were zero, so no one cared, right? Our group cared. And the reason why we cared so much about a government money market fund, because it met the certain pieces of the puzzle of why we wanted to use a government money market fund, because it had thousands of transactions, highly regulated, and it was super safe. We chose a Rule 2a-7 government money market fund in terms of seeing the whole picture evolve. And why we did this and why we wanted the component of all these large transactions and the multitude of transactions is we wanted to see if we could use public blockchains, if we could break the tech, stress the tech. So this is more of a POC in-house. And for us to use blockchain made perfect sense because Franklin Templeton's a large asset manager, 77 years old. Our start in terms of the rise of Franklin Templeton's through mutual funds. So we're a system of ledgers, so it made perfect sense. Most money market funds pay monthly. And one of the reasons why we wanted to use blockchain is the ability to pay daily. So we pay daily accrual to our investors every single day. And we think that's powerful, right? So to us, this is not our, and forgive me, our parents' money market fund anymore. This is something that has evolved into something entirely different. And to everyone on the panel, we're discussing these utilities, the efficiency gains that we've witnessed. We witnessed massive shifts in terms of efficiency gains of running our own digital transfer agent that mints authentically on chain. We're not running a legacy transfer agent and a digital transfer agent in parallel or in tandem. We use our digital transfer agent strictly. So for us, the ability to mint on chain as well is also part of why we're super excited about a U.S. government money market fund complex. And look, you've all going back to, are we excited about money market funds? Exactly, yes. Even in a cycle where we're seeing rates getting cut, we still think that the opportunity set to use Benji as, that's our Benji token, to use Benji as collateral. We're in different tri-party agreements right now with exchanges and using it as collateral in certain constructs of our Benji token. We think it's a form of settlement, payment. The ability that we've enabled through the use of blockchains and the use of this U.S. government money market fund is we've enhanced it where it's peer-to-peer transfers. Any shareholder can send a Benji token to another Benji shareholder. There's instant transfers, right? And then there's also intraday yield, which we think is one of the biggest exciting pieces of the puzzle, which is patent pending, et cetera, where you start to see institutions like NASDAQ and Figure and T0 being able to interact with each other as long as they have a Benji wallet. You can send Benji tokens up to the block time, up to the second. Rick sends it to T0. As soon as T0 gets those tokens, T0 is the official owner of those tokens. And that's powerful when you can, sending yield matters and when you send it matters. So that's why we're super excited. And if you can tell, I'm pretty excited about what we've built and working with potential partners like everyone on this stage. So we're super excited.
It's super exciting. And I think that not a lot of people appreciate when you have a batch process fund admin, what does it mean to do real-time yield calculation? It's not trivial. So yeah. I know that it took a lot of investment to bring those type of things to life, and that's really awesome. Michael, HELOCs, again, is not a new product. Can you just share, like, from your perspective, is the tokenization and use of blockchain, is it just saying like I shaved 50 to 100 basis points and therefore I gave a better product? Are you able to get like different sources of liquidity now to fund the credit? Or did it also just open different segments of customers that historically wouldn't go to HELOCs in the past?
Yeah, I think it's done a number of those things. Just to break it down, one, what do we do in terms of the provenance of the loan, right? And the L1 that we work on is provenance, so it's a small plug. But at the same time, if you think about what the liar loans of the 2008, 2009 mortgage crisis, there was this whole concept of who owns the loan. And even recently, for those of you that you might be aware, there was this big blow up with a subprime mortgage lender that was kind of double pledging the loans recently. It was called Tricolor, and Fifth Third took a $200 million write down on that. And so there's always this, and I've spent a lot of time in fintech, and when you're pledging loans and selling loans and securitizing loans, there's always kind of a question of they just exist on a spreadsheet. And so I think a very real, one real very tangible example of what we do with a product called Digital Asset Registry Technology, DART, is we actually confirm that there is only one, there's perfection of the lien, and when we register the lien with the county, and then when we trade that mortgage, we know on-chain verifiable, who owns that loan. So I think that's one very clear example, starting with issues in 2008, but now even issues like we see, last week, a very tangible example of the value of blockchain and tokenization and what we do. Number two, I'd say is, you mentioned shaving basis points off. Also, and in the private credit space, you have often, third-party diligence firms that will go and they will audit every single transaction and confirm the details of those loans. When I was younger in investment banking, when banks are buying and selling loans, it's loan by loan file diligence review. And with Figure, because we're going to hash the attributes of the loan up front on a blockchain day one, it means that we don't have to have the same amount of third-party diligence review on these loans. And in fact, we reduce that whole process through a combination of cost and speed by about 80%. So that's probably another big example. And then the third is just general liquidity. Both of those things that I mentioned tie into liquidity because homogeneity yields liquidity, right? Obviously, NASDAQ being an example of that and in public equities. But there hasn't been that same level of liquidity in things like mortgage and HELOC and in private loans. And we're bringing that, and so just, we've done about, I think, 17 or 18 billion of origination on our platform, but there's been 65 billion of trading. And that's because the barriers to trade private credit, when you have that lien perfection, when you're doing less third-party diligence review, they're much lower, and so you get that liquidity.
Yeah, awesome. You mentioned provenance, and someone gave me a question to ask about the rails, even though there's only one answer to that. But with that, when we started building Canton, our view, and I know, for example, with provenance, we would be sharing a lot of the thought process. When we think about collateral, the ability to be able to show that a chain can be the books and records, and not just a mobilization of an IOU token was critical. Privacy,
right.
For us, large-scale adoption cannot happen without privacy, and not to conflate that with anonymity, which is a very different thing. Those components were extremely important as we were designing it and thinking, what does it mean to have large institutional adoption? How do you think about it when you're building T0 and you're thinking, like, does the rail have a big part on how you think? Are you thinking about it purely as distribution, or do you think about it as like core feature to kind of like the soundness of what you're offering?
Yeah, no, it's a great point. We have many talents at T0. Picking winners in protocol wars is not one of them. And so our objective is, and it's not a new point, it's the way people have been thinking about infrastructure for a long time. Our objective is to provide the best platform in terms of regulation, in terms of operations that allow people to raise capital, trade capital, custody it, automate some of the corporate functions that you talked about, whether it's paying distributions, whether it's voting, and on an infrastructure platform that is best of breed in the US for tokenized securities, and I believe we have that, but is also stitched together with similar infrastructure providers in other jurisdictions, so you can have this kind of follow the sun infrastructure belt that helps global digital assets be global and not stop at the borders as much, and as well as operate cross-asset again, as I mentioned. So beyond that, we want to be as helpful as possible to a variety of folks that are innovating in this space with different technology standards. We have one requirement, and that's both because we have to do it as a broker-dealer and because it's the right thing to do, is that technology passes robust security and other due diligence. I think beyond that, we want to be open and support innovation in whichever way it comes that protects our issuer customers and protects the investors as well.
Perfect, awesome. Matt, as an operator of exchanges all over the world, do the rails matter?
Yeah, so we think the rails matter. However, we are not one to pick winners either. The rails matter from a certain angle. So when we think about it, there is the resiliency of it. There is the scalability of it. Privacy matters. So you mentioned privacy earlier, Yuval, and I know, Michael, the same thing with you on provenance. Privacy is important. When you think about the way folks trade on NASDAQ, we process 3 million messages per second. So within that time, there's a lot of information leakage that can happen. So privacy is important across the various rails that are being traded on. And I think where you really start to see blockchain thrive is especially on the post-trade processing component of it. So when we talk about trading of the asset, it can trade on-chain, it can trade off-chain, but really where you start to see the blockchain ultimately thrive is on the post-trade environment as well. So having that and making sure that you have the scalability to process all of the trades that happen through it, throughput's important, but having that security and resiliency in traditional markets, it's unacceptable to have downtime. So we need to make sure that uptime is extremely important. So the resiliency matters. So having all of that combined is important when we think about where we're going to put assets and where we're going to utilize other pieces of our infrastructure on different types of blockchains.
Perfect. And Rick, I think there's another set of rails like Zero Hash, for example, that allows stable coins to move freely into exchanges, funds. I think you at Franklin use them to fund some of your activity, allow customers to fund the funds with stable coins. So first of all, can you talk about rails like Zero Hash, but also the importance of stable coins in terms of making this successful?
Yeah, look, I think I might have said it earlier, but it's about optionality, it's about choice, it's about access. When we partnered with Zero Hash, I think it's been, Edward, a couple years now, and we've been going on this journey together. And we saw things very clearly, right? We wanted to provide access to clients that hold stable coins, and the ability to convert those stable coins using Zero Hash, their services, and from fiat to Benji tokens. And we just think that's a super exciting way to utilize stable coins and Benji token, US government money market fund in tandem, right? It's not one or the other. It's using both. And the ability to think of stable coins, your crypto checking account, Benji's your crypto savings account. When you're not using your stable coin, why not earn yield on it, right? So that's why we think it's super powerful to provide, like I said, these access points to clients to meet them where they want to be, right? You hear about clients and what they need and what they want. You're going to start to hear more. You've already mentioned how we think about stable coins. We think everything's just getting started in terms of what's going to happen obviously the rise of the Genius Act and what that means for everything as we know, but it's liquidity, right? Everyone on this panel, right? It's all about providing liquidity to clients and what they need and how they want to use the stablecoin. But if you're not using your stable, you should be buying a Benji token if you don't need it. Right? So.
Totally agree. So switching gears to regulation, a lot of times people ask me, is regulation helpful? All of the new laws that are coming into place. And my answer is yes, the Genius Act is a game changer because, again, it put a legal framework around a new asset class. I think the Clarity Bill will also be helpful. But honestly, for me, it's actually the posture of Washington and the regulator that is probably more helpful.
Right.
Because historically, what you've seen is provenance, existed before the Trump administration. But I'm pretty sure you're seeing much more activity now, regardless that if the regulation was helpful or not, because you're seeing clients are much more comfortable interacting with the technology, because before, even if they thought that they were on the right side of the law, they were worried that they would get in trouble. So with that said, I mean, Michael, you guys you went public, a lot of filing. I'm sure that when you talk to investor, this topic comes up. Just kind of share your thoughts in terms of regulation, tokenization, and just what does it mean?
I think you phrased that nicely, Yuval, in the sense that obviously the specifics of the regulation, those matter. But I think more fundamentally, you have an environment where, for Figure, we have about 200 partners. Almost all of them are what people in this room would call TradFi, and they're not necessarily looking to Figure and saying, we want to tokenize, right? So I actually look I compare what we do in many ways to the beginning of SaaS and cloud. When people started adopting cloud software, they weren't excited about cloud for cloud's sake. They were just excited about what the SaaS software, being updated instantly and having more simple user interfaces and a better economic model could do for them. And I think similarly for the 200 partners that we have, they're not necessarily looking to tokenize, right? They're looking for efficiency, lower cost. And so, but we do use blockchain. And as a result, I think historically among these TradFi companies, they might have been, if you mentioned what's your blockchain strategy in a boardroom, say a year ago, people would be laughing. And I think today, if you're not mentioning that, it's a huge problem. And so that's been a big tailwind for us as we look to partner with people that maybe, we're still offering the same value proposition. We were growing back in prior administrations, but what we're seeing now is there's a lot more leaning in and people excited about the future of capital markets and excited about what's going on in this room. And I think that posture is probably the number one that thing that has changed, at least from our perspective.
That's awesome. Alan, you mentioned you're a lawyer. Like, do you see securities law having to change in order to really give the full potential of this technology? Like, where do you see we're going?
Yeah, look, I said I'm a lawyer. I didn't say I'm a good one, but
That's why I just said lawyer.
Yeah. My reputation precedes me. That's good. Look, is clear regulation important? That's sort of an IQ test kind of a question, right? Of course it is. But the question is how? And you touched on something that's really, really important, Yuval, right? One impact is substantive, right? And we've got, the Genius Act was passed, market infrastructure bill is working its way, and we'll hopefully get to a good place from that perspective. But a lot is still remains to be done in Congress and at the level of the agencies, including the SEC and the CFTC. And if we are to future-proof a lot of these changes, regulatory changes, from kind of the vicissitudes of politics, then you got to codify them into law, and not just remain with changes in philosophy or enforcement patterns or actual rules at the agency level. But there's still a lot to do on the substantive stuff. The bigger point, as you said, is psychology, individual psychology and collective psychology. And if people feel that headwinds turned into tailwinds, then people will make capital allocations in a way that supports innovation in the United States. And that's a big priority for President Trump and this administration and the leadership that he put in the various agencies. that allows non-U.S. participants, enables them to enter the U.S. market in a way that is immunized from some of the risks that they were dealing with in the past. And so the psychological piece is really important. You know, how the technology itself impacts compliance, I think, which is the other piece of what you're asking. And again, look, that's the self-regulating nature of smart contracts. And it's a piece that doesn't get talked enough about, is how do you monitor compliance now? It's mostly people and paper and electronic book entry processes. But at the end of the day, there are many potentials for things to go wrong if technology is hardwired to do certain things and never do other things. Then a lot of the legal focus can be handled more efficiently. So that's the ultimate prize. But look, I'll say at the end of the day, I think regulated middlemen are not going away anytime soon. There's a lot of enthusiasm around a range of initiatives, including Project Crypto in the US. But the kind of institutional comfort that lies with making major decisions and sending billions of dollars to a wallet address that is not supervised by any infrastructure around it, I think that comfort level is still a ways in the future.
Yeah, and maybe we'll have another person who can talk where regulation is going later. But Matt, you recently put a submission. I don't know if I'm allowed to ask questions. It's not in my list. But since Reg and MS have been a big topic in terms of tokenized equities, and not for those that don't know, Reg and MS is a best execution law that forces exchanges like NASDAQ to make sure they route orders to the best price, NBBO, National Best Bid Offer, and recently some of the exchanges, crypto exchanges that want to tokenize equities said, absolve us from that regulation. Maybe if you can share kind of your thoughts as a national exchange, how do you think about that, and where do you think we're going?
Yeah, well, thanks. And I think the way we look at it is we have to think about the investors and the investor protections that exist out there. To remove all types of investor protections wouldn't help, right? So we think about it from really first principles of what are the investor protections that exist out there. Look, regulation more broadly, there's always room for improvement, and we know that. So yeah, I think your point earlier was good in terms of the posture of the regulators themselves around whether it be the SEC or the CFTC. In our engagement with them, it's much more engaging with us more broadly about like what works, what doesn't work. Where do you see that whether it be Reg NMS or other pieces of regulation are going? For us, it's always just embedded within those investor protections to start, and to ensure. And look, we all welcome competition. We all want it to just be on a fair playing field in general. So for us, it's a matter of what do those regulations look like, and then ensuring that investor really has the protections that they need. So in the event that if there is any sort of issue, that we can fall back and look at, well, what has regulation done? How have we protected those investors more broadly, and to ensure that we have the markets that we do, which are really just generally the envy of the world for capital raising and secondary trading.
Yeah, I like you said playing field. I totally agree. I think that what my hope is that we're moving towards rules that are clear. If Reg NMS is not the right investor protection law, come up with a new law and make sure that everybody comply with it. I think that that's an important, rather than having exemptions. Maybe just last on this topic, Rick. I mean, from all the panelists, probably Benji is the one that is very international. You're doing partnerships in Asia and other places. Do you see an impact on the regulatory change in the U.S.? I know historically we always said that Singapore or Hong Kong, those places were more advanced. Do you see them now trying to play catch up with the U.S.?
Look, I think this is a global phenomenon that you can't stop, right? So I think everything that's happening here in the U.S. with stable coins and how they're going to be flowing a lot differently is also going to be enhanced globally. Like, we work with some of the strictest regulatory bodies in the planet, right? With when we developed Benji, you know, SEC registered. When we developed Global Benji, it's registered by the CSSF out of Luxembourg, MAS in Singapore, BVI. So we feel that the rapid, you know, super speed change that we've witnessed over the last 6 months in terms of the tectonic shift, it's all going to be replicated throughout everything. And I think it's just, it's the rise of these technological advances, whether it's AI or it's blockchain. These are the next evolutions of society as we know it that are going to enhance, you know, everything we do every single day, right? So I just think that when you first start thinking about all this stuff, it's about money movement. It's about money, right? At the end of the day, this is making things more efficient and giving democratization to people throughout the rest of the world and access to money where they didn't have that access. And the beauty of it all is that it's a phone, right? You can do whatever you want on your phone and interact with, you know, different types of people sending money through the speed of blockchain, right? So we're in a really amazing time period for everyone to kind of see things transform.
Absolutely. Well, thank you all of you, everyone, for participating. You know, I think that it's pretty clear that it's here. A lot of times people ask me, when is tokenization going to happen? I try to remind them that publicly traded companies still talk about their cloud strategy. So you don't ask, is cloud here already? It's a question of how much every year. We have a great example from Figure. On Canton, we do close to 10% of the daily repo market. So we're here already. I'm super excited to what's to come. And I think from here, we're just going to measure how much more every year and not going to stop asking when. So thank you, everyone. Thank you for listening.
Okay. Thank you, everyone. One more round of applause for our tokenization panel. Thank you so much.